What is the stop loss and why is it important? And last but not least, should you have one on your trades? And the answer is absolutely and empirically yes. Stop losses are essential to trading because they are how you manage risk. As we talked about in some of our past videos, managing risk is more important than any other aspect of trading. Technical analysis, fundamental analysis, none of it matters if you can't manage risk. They are important, however, once you understand how to manage risk. Every trade you take, you should know exactly how much you're willing to lose for exactly how much you're going to make. That is important. So taking a look here, we're going to run a quick example of how to set this up on WeBull for those of you that don't know. So we're looking at Outlook Therapeutics stock I really like right now. It's trading just below about 121. This is a trade that I really like right now. However, I want to see it over $1.20, and I don't want to see it below $1.11. If we go below $1.11, this is why stop loss is essential. We're more than likely going to test down to about 90 cents. So that means you're going to immediately be down 20-30% if you were to add this without a stop loss. So why would you do that? You don't want to do that. Don't do that. That would be stupid, right? But say you don't want to stare at the stock all day. You want to set the order and forget it. So let's go make a pretend order here. We're going to go right here to our trading widget here on the WeBull app, and we are going to put in a buy order at 10 shares, $1.28. We're not actually buying at this price. This is just for a hypothetical example. But let's put it at $1.20 just in case some of you are ballsy enough to do it. And then we got these two options here. One is stop loss, one is take profit. So we're going to go right here to these two little buttons. We got stop loss and take profit. We're going to go ahead and select both. We're going to start with our stop loss. Remember, your risk reward is essential. You need to know it before you go into any trade. You should know exactly what it is. How many dollars are you going to risk for how many dollars in profit? Mine, personally, I will risk $1 for every $2.5 in profit. So if we're going to set our stop loss at negative 10% here, what does that mean our percentage on the take profit order needs to be? Anybody, any guesses? Correct. You're so smart and handsome and beautiful. The answer is 25%. If we're going to take a 25% profit, we're willing to risk a 10% loss. And that's if we're buying something that we are sure is going to jump from the point we're going to buy it. But market pressures sometimes destroy our position and kill us, and that's what we have to live with. So in this trade, we know with certainty our max loss is no more than $12. Our max profit is $3. So what we are going to do is we're going to risk $1.20 loss per share, and we are going to reward ourselves with a $3 per share profit. Sound good? So after you do that, you want to go ahead and just press buy, and this will execute the order as a bracket order, meaning once your shares are filled at $1.20, it will also incorporate this stop loss at negative 10% and this take profit at positive 25%. That is how you make sure that you are never done any of these trades, because I see it happen every day and I don't want to see it happen to you. There's your tutorial. I love y'all. Stay blessed.